trading at its best.
Well, let's go ahead and get started here. So for those of you that this is your first one, I guess first of all, let's just see how many of you, this is the first time you've been to one of our weekly webinars. Is there anybody new with this today? We just did kind of switch things up. Before these, we were doing the Forex 101 webinars with Nate. Okay, we got a couple of you. This is your first one. Okay, so yeah, starting last week, we decided to do these Forex Weekly webinars that I've jumped in and taken over. And last week we talked about just automated systems and robots in general, and kind of got into some training on things you should look out for when you're deciding if a robot's any good or not. And we had, of course, a lot of questions about Tom's EA, and that's the system that's currently, the popular system being talked about for the last few weeks. So we mentioned that we'd probably hold a webinar where we go into all those details about the system and kind of just dive in deep into it and go over a lot of details about the system. So, and if you guys have questions at any time about the system, you can just feed them in the chat at any time. Okay, so once again, my slide isn't in order. I'll have to get that fixed for next time, but no big deal. Okay, so like I said, today will be all about explaining Tom's EA. Since I know they're about to close things up on that, and those of you that are on the fence about it, I'm sure you have some questions, or you kind of want to see it, see it from a different perspective than just from those guys. So we'll talk about what it is, how it works, and how you can get it. Really basics, just everything you need to know about it. So let's do it. Let's just jump right in. Let me go ahead and I'm just going to bring up their one of their websites. You guys can probably follow me over if you'd like. And I can show you where. Actually, let's hold off on that. Let's do this. Let me just bring up the blog post. I want to make sure everybody has been able to access that. Okay, give me just 1 second. We'll bring this up. Okay. So what I want to explain really quick before we jump into this is we decided to start putting a good amount of time into writing articles and doing these webinars. So what we did is we put up a blog where we post these articles sometime throughout the middle of the week before the webinar, so you can kind of get an idea of what we're going to talk about, and it's just kind of a short summary. And then we hold the webinars on Friday at the same time every week at 2 p.m. Eastern. So if you look on here on the blog, you can see already it's the same type of format. What's Tom's EA? How does it work? How do you get it? And so these are going to be, like I say, this kind of a summary. The webinar will actually get into the charts. We'll get into the performance. We'll get into showing you how it installs and all that kind of stuff. Okay. So as you can see here, Tom's EA is a robot, which means it's an automatic trading system, and it runs on MetaTrader. And how many of you don't know what MetaTrader is? Is there anybody that has not used MetaTrader before? MT4, MetaTrader, kind of has a few different names. Okay, I'm not seeing any responses on that. So yeah, I figure most of you probably have used it. It's a very popular platform. Most of these systems out there work on it. It's just just like TradeStation and NinjaTrader, except this one actually is a free platform that brokers have to pay for. And there's quite a few brokers that support it. Now, like I say, it's an automated system, and it trades 5 currency pairs. It trades the euro dollar, the pound dollar, the US CAD, euro pound, and Australia, New Zealand. So one thing you'll notice, if you've looked at their MyFX book track record, you'll see that they've had some losses in the past. However, if you just do a little bit of research, I can show you guys this in just a second. If you do a little bit of research, you'll see that the Australia-New Zealand is the pair that's losing them money. The other pairs have done really well. And you have the option of picking what pairs you trade. The demo or the trial that they give out, they have you just set it up on the euro-dollar only. And I'll show you my account where I've done that. I've just set up the euro-dollar only, and you can see how that's been performing. But for them, they've had a 21-month track record of making 288% on about, it was like a $9,980 account, so basically a $10,000 live account. And this was accomplished through kind of a unique money management strategy, and it's kind of like a martingale, but not nearly the same as far as it's not doubling down on every trade, because that would be extremely aggressive. And they also have a cost averaging, like portfolio of pairs trading style. And I'll kind of explain how that all works on the charts as well and on their track record when we go over that. Okay, so let's do that then. Let's get into how it works. I'm not just going to read along this thing. I just wanted to kind of show you this. But you're going to see it runs on the 1-minute charts, even though that doesn't mean it's scalping. It's not scalping and getting in and out of trades quickly. It's actually holding trades for around 3 days average. And I'll show you that on my FX book, how we can tell. Let's bring up their MyFX book first. Okay, so here is their MyFX book account, and you will see that just recently they went through one of their drawdowns that comes around every year or so, and that's just part of the way the system works. This yellow line is their equity during the trade, because what they do is they hold many trades at once and close them for profits, close some for losses, but overall the equity curve is the kind of the drawdown intratrade, and then you've got the balance is the solid line, red line, and that is actually the balance from closed trades that are finished. So you can see up here, these were just open trades that were floating, and then it eventually hit the drawdown level that they specified and closed them out. And this is when most traders freak out and are thinking, this system's crazy, I just lost a bunch of money, I got to quit. Well, when they quit, then naturally you see it gets back on track, makes all this money. That was the worst time to quit. This is the same stuff we talked about last week, so I'm not going to get into all those details again, but most traders quit here and then the system takes off again. And here again, if somebody started back 2 months ago and went through this drawdown, they might have quit there. And it's probably going to take off again like it did before. We don't ever know for sure, but based on their back testing, their live trading, their demo trading, all that stuff, we can kind of get an idea of what to expect. But now let me show you this. These drawdowns are pretty rough, and depending on your settings, you know, if you were trying to trade a little bit more aggressive than them and you didn't have a lot of leverage, you'd probably get margin called before this even happened. Or you might have got margin call here. So that's where you've got to be careful. I don't know if some of you might have traded this system in the past, but someone's saying here it depends on also when you get into the market. Yeah, that's right. That's the thing. So these guys might have seen this drawdown right here, and if you started it a little bit after that, you might not have lost at all. But if you started around the same time they did or just before that, there's a chance you could get caught in one of these type of drawdowns. But like I say, the key is to not try to get greedy and want to make a huge return in a short period of time, because if that's what you're looking for, that's not what TomZA does. What they've got it here is pretty much the maximum settings you can use. It was just up 288%, took this hit, but that's, like I said, I found it was because of one specific pair. And let me go ahead and show you that. If we go into summary, you can see the 5 pairs that it's trading. And take a look at this. There's 2 pairs that are making the losses, that it's almost worth just ditching them and only trading the ones that are profitable. If you look at the Australia and New Zealand, that one's lost the most money. It's lost 6,607 pips, which is equal to $15,975 on this account. Now, if they weren't trading that one, it wouldn't have lost. If they weren't trading these two, they wouldn't have lost anything. They'd be up. You could add these up and see how much, $15, $16, $18,000. And if you actually go over here, that's on just the longs. If you go over here on just the shorts, you can see that actually on the euro pound, it made up for it, but it's what was causing a lot of the drawdown. You see this profit from the shorts made the money, profit from the longs lost the money. So that's another thing you can even do is when you set up an EA on the charts, I'll show you how to do this, but you can tell it to trade longs or shorts only. And you could tell it to only trade longs on these pairs. Then you would have made another $2,100 instead of lost $22,000. So that's a big difference. But anyways, you can see here's the total columns. So there's the total net result of the Australia, New Zealand, and the euro pound. So both those just don't make money if you take both sides of those trades. Now, of course, we could look at this and say, okay, all the longs are losing money, shorts are making money, but that might be because of the current trend direction or the trend direction for the last couple of years since they started this. And so, when it's profitable on shorts now, this could start to flip a little bit, so that's where you'd have to be careful. And the safest bet might be to just eliminate them altogether. Let me go ahead and quit where we're at for a second. I have some questions coming in already. Let's see. So yeah, someone's pointing out you want to be careful with leveraging certain accounts because it can come to the point where it won't allow you to take any more trades because you ran out of margin. Let's see. Hal says, it's a big problem with all. You can't predict when the cliff will happen. Yeah, and like I say on this one, that cliff was because of the Australia, New Zealand. We could go back and look at these trades in the history that just took the loss. And you'll see right there, Australia, New Zealand, Australia, New Zealand, Australia, New Zealand, all three of these. If we keep going along here, it was all those losses were from the Australia, New Zealand. And I think they said that's a pair that they suggest you only trade if you want to trade more aggressive, but looks like it's not even worth trading at all. If you look at, like I say, if you look at this summary. So, like I say, when they tell you to set up the demo, they don't suggest even trading any of these other pairs to get started. You just trade the euro, and that seems to have the smoothest track record. And actually, you can click here and actually see just the euro dollar itself, see what kind of trading record you could expect. And you can see there's only 2 losses on this pair. And if we go to that euro pound, there's where it had the cliff. You go to Australia, New Zealand, there's where it had the cliff. So really, these just need to be eliminated. Okay. So yeah, like I'm showing you guys here, I'm not saying Tom's EA is a great system or you should buy this system. I'm just pointing out the things that you might not have noticed about it, showing you both the good and the bad. And like I'm saying here, maybe if you eliminate these pairs, maybe that doesn't solve all your problems. There might be a euro dollar or another pair that you trade that does end up having its cliff, where it takes the hit. But what I'm saying is, what you might want to consider doing is setting the system up if you decide to trade it and setting it up more for just building you a smaller return over time. Don't try to push the limits and set it up really aggressive. Lately, I've been kind of having the attitude of just find a couple different styles of system. Find one that you set up that earns you a yearly return that you want to shoot for. Maybe it's only 10 to 15% is all. 10 to 15% is much better than you'll get in any, in most of investments out there. Especially the banks, of course, those aren't going to get you nothing really. So Tom's EA, I think, might be one of those type of systems. They're trying to push it that you can do this 200, 300% over 21 months, or that's pushing very aggressive though. Even if you did eliminate these, like I say, it doesn't mean this isn't going to happen. This is a 46% drawdown. So let's say you want to do 15% a year, or 20. Let's say even 20%. That'd be a great yearly return if you can get it to where it's a lot less risk than what they've got here. So they had it at 288% over 21 months. So that was 13% a month actually. So if you times that by 12, they were shooting for 164% a year. So if we divide that by, it's basically about a tenth of that. We could say divided by 8, it's about 20. Okay, so if you say, okay, I'm going to trade it 8 times less aggressive so that I can just shoot for my 20% a year, and then this curve isn't going to be so crazy. I'm not setting myself up for potentially a 46% loss that way. You can take the math and say, okay, instead of 46, I can probably expect a 5% drawdown. That's a lot better to only have to risk 5 or 6% to get a 20% yearly return. So if you look at it that way, Tom's EA is not a bad system. If you look at it as you're trying to, pay the bills or earn an income off of it, you're taking a big risk. Or especially if you're trying to grow a small account and trying to double it, triple it, and size it up. That's not what this system is for. In fact, I've been following another one that hasn't gone public yet that's an options system that's designed for that. It's designed for taking a small account just with the idea of it's huge risk, but you grow it into a large account that then you set up for making you money and income. So, trying to take a system like Tom's EA and make an income out of it is really only going to be possible, like I showed you here, if you scale it back and then trade a larger account. If you're trying to make $5,000 a month, you're probably going to, like I say, do better off saying let's go for 20% a year. So you times that by 12. So you got to make $60,000 a year, and then you divide that by 0.2. So you would need a $300,000 account to try to make an income of $5,000 a month. So if that's what you're looking for, trying to make $5 grand a month, you're going to have to build up an account first with something else. Okay. So anyways, that's where I'm just I didn't expect to kind of go over all that in this webinar, but like I say, there's different types of systems. You've got to find a system that you're not trying to pull money out of it. You're just trying to grow to a large account, and then you can find another system that's going to build you a nice income over time. And then sometimes you might even have a third style of system that you look for that is basically going to trade a large account, not a large account, sorry, a smaller account, kind of in the middle, not really conservative but not aggressive, and that one you look at it as the money that's in that, you're okay to, you're fine with risking it all and losing it, and that's when you can go crazy on something like that. But really, you want to get the other two established first. Try to get that small account to grow big, then take the big account to make you income, and then set aside some of it for somewhere in the middle. Okay, so yeah, this is being recorded, and after the webinar, we shoot out an email, post the recording. And actually, the recordings just go on the, I'll show you real quick here. They just go on the sign-up page, actually, but we'll get you that link. Let me just show you real quick where they'll go. So it just goes on TradeWestForex.com/webinar/weekly. I'll just post this in the chat. We might as well while I've got it up. Okay. So you can see right down here, here's our last week's automated EAs, and I think I can give you the 101 webinar replay link as well, because we had a bunch of webinars on just basics of Forex that we recorded, and here's that one. So we had 11 modules, and I'll post that link from the 101 replays. Okay, so those are both in the chat now. Okay, let me back up here. I got some more feedback and questions coming in about Tom's EA here. So, okay. Can you increase the print size? Oh yeah, I could do that again. That's what we had to do last week. Kind of bump up the size here so you guys can see everything a little more clear. So like I say, some of you might see things like this and think, wow, and just walk away from the system. But I'm showing you a few things you can point out in this that you have control over. Australia, New Zealand, ditch it. That would take away that that recent hit that just happened right here. Euro pound, ditch that one. So, you know, obviously those ones over this 21 months were the losers. So they're too aggressive. But like I say, still be careful because these other three could hit it. That's where I say just pay attention to your risk settings and definitely don't trade it more aggressive than the settings they have theirs at, because that's at 46% drawdown. Okay. Let's see. Tony says, every time I traded Australia and New Zealand, I always lost no more. Okay. Yeah, like I say, with really any system, you've got to be able to decide what type of system it really is. Is it one that you're trying to grow an account, or is it one you're trying to make income from? And then decide the balance you're going to need and the settings to accomplish that. Hal's asking, can PipStat be used with other EAs to improve them? Yeah, I'm going to show you that after, you know, towards the end of the webinar. I can definitely show you, even maybe with Tom's EA, how you could possibly improve the system with PipStat. Kenny says, Tom's EA would have made a 413% gain with a 20% drawdown traded without the Australia, New Zealand, and Euro pound. And what he's probably doing is you can do this custom analysis, and you can just say Euro, pound, US CAD. You could even say how much money you put in. Let's say maybe you put in $5,000. We'll go the whole period. Timing, we'll just leave everything the same. But you can see this is another thing you could do is you might find certain days of the week it's doing better based on the analysis below. Hours of the day, you can turn some of this stuff on and off and check it out. But let's just do that. Let's just keep the pairs. This is what Kenny did. And now we can look at it with, if you did not trade those pairs, what would have happened. So actually for me it's showing, this might be because of the compounding possibly, but showing a huge return, 739% with a 25% drawdown. So now that 25% I think is closed trade drawdown. I don't think it's counting this equity drawdown, but I'd have to see for sure. Anyways, so that's something else, you know, now you might not have used before in my FX book, and now you can see exactly how that would have worked out. Oh, he used the default deposit. Okay. Okay, Kenny says it is the open trade drawdown that they're showing here. So that's good. With Tom's EA, are they using hedging on the pairs they are showing in the MyFX book results? I'm not actually 100% sure on that. We could do a little research in here and see if we go into history, and we can try and see if they ever had a buy and a sell open at the same time on some of these pairs. Might take a little bit of work to find that, but okay, here's where they were. Let's see, that one bought on the, okay, that one closed at 15, that one closed at 17. So yeah, they were hedging. If you look right here, this is how I can tell. This trade opened on the 1st at 12.25, closed on the 3rd at 15.32. Well, at the same time that this one was open, there was another trade. That was a sell trade. If you go up here, this one opened 6 hours after that and closed 2 hours after this first one. So it definitely was, it was hedging in this system, in this results we're looking at. Oh, Kenny says also custom analysis could help with that too, where you could just go tell it, show me only one pair to do that analysis. So we could go back over here, say just show me the pound, hit analyze, and that way you could more easily find out if it was hedging. And there you go. So there's another trade right here where it was hedged. 13.47, this one opened, which was before this one closed. So they were in at the same time. So that's something else too. You might want to make sure you got a setup where you can hedge, and I'll just post you guys a link to FinFX. They allow hedging even for U.S. clients, U.S. accounts. I'll just post that link in the chat. Okay. Kenny says that hedging can be turned off in the EA, but like I said, that might affect their performance quite a bit. So you might want to make sure that see if you can find a trading record without hedging. And yeah, Hal says they're saying that hedging was almost required. FXDD was the only U.S. broker that would do it. Says it made no difference in my case. They did not tell me that 2 of the 5 pairs would wipe me out. Yeah, that definitely can be frustrating. But like I said, though, this euro dollar could come along and hit it too. The euro pound did. It came along and got hit. Not maybe as bad as Australia and New Zealand, but it's best to just plan for it. And if it's gonna hit you like that, cut the risk in half, cut it down to what would be more acceptable for you to allow the system to continue to trade afterwards. It says institutional liquidity will also let you hedge in the U.S. Okay. Well, let's keep cruising along here. I wanted to also show you the demo account that I was running during the trial. Is there anybody that has not tried out their demo? Let me bring up my account here. Okay, so this demo just on the euro by itself has done pretty dang well for the last, started this on the 15th. So it's been about 2 weeks. And there's been a few losses in there, but mostly it's been profitable. And you can see 10,000 went to 11,023. Now on 10,000, it's just been trading a mini lot every time. You know, then when it takes a loss, you can see that money management kicking in. So you'll see when it was trading here, it was hedging, it was adding positions, changing the lot size, and that's where, you know, the settings I used here was probably pretty aggressive, because in 2 weeks to do 10%, you know, obviously that's going to be possibly even more than they were making on that track record, and I'm just trading one pair. So, you know, these settings might be aggressive for what I've got here. But let me do this. Let's go save it as a detailed report, and we can do some analysis here. Okay, so there's the track record. Here you can see when it took a loss, it had a smaller gain and a larger gain. That was from the larger lot size increase that it did right there. But you can see 33 trades. That's quite a bit of trading in 2 weeks on one pair. So anyways, we've done a lot of analysis over it. Let's do this. Not tried. Looks like some of you are saying you haven't tried it. Let me show you. I think that the demo might be expiring here really soon, but you know, let me just get you the link anyway. We have it on the blog. Let me just grab the link from here real quick. So I posted the link to the download. Like I say, it might expire today even, might not be till Monday. But if you want to at least download it and kind of see what the settings are like and how it kind of works a little bit, you might have some time still to do that. But let's go look at what they're doing for after the demo. What's it going to cost? And then what I'll do is I'll jump over and show you how we could possibly implement pipstat on this robot and other robots, and we'll answer some more questions. So let me go to their website. Give me just 1 minute, and I'll get you guys this link too. I know they're going to be holding some webinars where they'll get in and answer some questions as well, and I think they're going to show you some more accounts that they've been trading as well. Let me see if I can find some of these links here. Looks like they don't have the webinar link yet. Okay. Okay, so here is the here's the order page link. So I'll just go ahead and show you guys what they've got here on that, for those of you who are wondering what's it cost after the demo and everything. So here it is. What they did here is they gave two options. You can either lease it for $97 a month or own it. Looks like it's 3 payments of $832. And they're saying you can save $500 if you do one pay. I'll click that and see here. Yeah, so if you do one pay, it's $19.97. But if you don't want to take that risk of, you know, throwing $2,000 down, you can definitely do the $97 a month. But if you're already sold on it, or you've already been trading the demo and it's working out, or like I say, if you're going to use it as a, you know, a long-term growth system, the one-time payment or just owning it is going to make more sense. Anyways, that's the options they have on it. They probably throw in a few things if we were to click on one of these. Let's see if they're throwing in some bonuses. They're also doing the 60-day guarantee as well. So if those of you that didn't get a chance to really try out much, or you want to try their full version, they do have a 60-day policy on that. Okay, well, let's do this. Let's jump back over to my account here, and I'm going to show you how we could actually get PipStat on here and see how we can apply it. I'm going to give you an idea here of how you could do that. So give me just a minute. I need to drop PipStat into this platform, and I will show you how to do this. Okay, go in here. We've actually got a new update for PipStat that we're going to be releasing probably the beginning of the week, next week. So, but it's all functioning for me, so I can show you guys how this all works. Just need to copy some files over, and then we'll be able to test it. And so right now, if you guys have some questions or anything, you can be shooting those over, and I'll catch up on those in a minute as well. Okay. Okay, this last thing, and then we're good. For PipStat, how many bars are in the chart are needed? Well, the only thing we would need the bars for is when we go to analyze your previous trades. So what you would need is 1-minute bars, and so it depends on how far back you have trades. If you have a trade from last year, and you're telling it to analyze hundreds of trades that you might have taken and go that far back, you would need a lot of data. But I'll show you how that works here. Let me get this back up. Let me get this up here. I've got it ready now. Okay, so let's open up a chart. Okay, so here you go. I'm going to go ahead and apply the PipStat template. Let's see if I did everything okay. Looks like it. I might have to restart the platform here. Let's see. I do know I'll have to enable DDE in here. Okay, here we go. Okay, so here we go. Let me show you how we would do this now. Like I say, if you have some history in here, mine only goes back to the 15th from it was the first trade. So now I can look at all these trades. It's like 33 trades. If I have my PipStat settings, if I have my trades to analyze set at like 30 trades, then I'm going to need to make sure I have data, 1-minute data back to that date for this pair. And otherwise, if it's set at 5, 6 trades or 10 trades, then I don't really have to have a whole ton of data. Okay, so let's do this. Let's just leave it at the 5. Let's see. We'll just go with the default settings for now. What we do need to change, though, is this unique ID. That's how you're going to make it pick up on what these trades are in your history. So if I hover over one of these, it says it's ID 10201. So all these trades, I want to make sure they're all the same, but they're not changing IDs through these trades, and they're not. So it's 10201. So if I go into my settings and I set that to 10201, set that to the euro dollar. Oops. Okay, so 10201. Make sure everything's good here. Okay, let me just make sure I have all the files that's needed to do this, and then you'll see what will happen here. What it'll do is actually spit out a stop, target, and lot size based on the previous trades from TomZA. So give me 1 second. Let me just check on this. Someone's also asking if I was going to show the best and worst settings to use on TomZA, and I will show that too. I'll show you the settings I've got, kind of give you an idea of what's a conservative setting and what's an aggressive setting. And they'll be teaching that, I'm sure, too, but I'll kind of go over it with you guys. Okay, just about got it here. Okay, it's coming up now. Okay, so I close that. Okay, so now you can see it's generated a target and stop for me based on the trades in the history, and I have it just set at the 5, at the last 5 trades, and just looking 5 minutes after the trades closed. Now, what we're probably going to want to do is we're not going to have really control of stopping the trades from getting closed. So we're going to want to take and set that to probably even just 1 minute or even 0 if we can. I don't remember if 0 will work. Nope, it's going to make it go to 1. Okay, so we wanted to set it to 1 minute, so that way all we're trying to adjust is from trade open to trade close, what's the best stops and targets to use on the trades. Okay, so we'll set that at 1. We'll start with that 5 again. Okay, so you'll see those just adjusted there to 24 and 29 now. And if I go in and change it to 10, so analyze the last 10 trades, it's saying you needed a lot more room, 16 and 118. So with something like TomZA where it's not very consistent on the drawdowns, since it's hedging and using this different money management approach of their own, you're probably going to be better off with a much larger number than you maybe would usually use for trades to analyze. So if I have 33 trades, I want to probably push that. I probably want to go with those 30 trades. That's 2 weeks of trading, and if I do that, it'll give me a much better, bigger picture of what I really need for drawdown on these trades. So it's saying 16 pip profit with 108 pip stop. So based on that, now we could go back and look at some of these trades to see how valuable that would have been or if we were to use our, you put in our own stops and targets on the trade, what it could be like. What I'm really hoping to do, I've talked about this I think last week, is turn PipStat into an automatic system, where if you have TomZA running, it just automatically closes these trades at the stops and targets and uses our lot size. And it seems like the only way that's going to be possible to actually change the lot size, especially, would be to have it use a master and slave type setup. If we're not trying to change the lot size, we might be okay with just changing the stops and target on the trade. There's some robots that might go in and change it back, so in that case it still might be necessary to have the master and slave. What I might be able to do is create it both ways, where it just knows you can you can go either way with running it on the same account. It just knows it won't trade the lot size, but that's something we'll be working on in the future. That's the thing, like I say, messing up the possible logic of TomZA, it could possibly do that. That's where you would want to really just have it use a master type slave setup. But anyways, we could always test it and see for sure. But let's just look at some of these trades. Let's bring up a chart. Let's go with like the hour. Let's see, we got a 16. Let's go with a 15-minute chart. So let's pull some of these trades up. Let's just start back at this last trade that just was taken. Okay, we can see that trade had a drawdown of 37 pips, so that stop would have survived it, and then we would have taken a 16 pip target, which is much smaller than the target they made, because this trade was trying to pull all their equity back up, and it's much different than what we would be doing with our calculations. But we could start going through each one of these trades and maybe have a little spreadsheet up or make notes on the charts of if it hit that target or that stop or not. So we might just put a check on that, say that made 16 pips. You can look at this trade here. That one went down. Clearly it would not have hit our stop. We would have made 16 pips on that one. That's all you have to do. We can just drag these trades on, or if you have our tool PipStat Manager, it'll already have all of your trades on there. All of these arrows will be on there already, and you can just hover over the arrow, and it'll actually tell you what the trade result was. Anyways, though, that one there is another one. We could go through all these and see, but you might even find that one of their losses, let's go look at one of their losses right here. You might find that one of their losing trades potentially was in profit, 16 pips, and you might have got out and made money on it. Let's see if we can look at another. Here's another one there. Okay, that one there maybe. It went up 23 pips, so there you go. There's a trade that it would have gotten you out for profit rather than a 87 pip loss. But like I say, this is going to be kind of difficult to really set up and do manually with a system like this, so that's where I say if we could automate this part of it, that could help a ton. And I'm even actually going to be working on some changes to, I don't know if you guys remember, or if you guys have seen our Forex Decoder, DDSMM. We've got kind of a different version, different approach that we're using, but that does kind of what we're looking at here. But it does it for the lot size. It basically copies the best lot size over and uses the existing stops and targets and doesn't really change this formula of the system. Anyways, though, you guys get the idea kind of how this would work. Basically, on these three trades, I could be using this target and stop, and I could just go manipulate these or manually take over them if I would like. That's the current way you could implement PipStat with EAs. Okay, so we have some questions that have been coming in. We'll go ahead and answer some of those. I'll also go ahead and show you guys the settings of TomZA. Let's do that real quick before we jump back over. Okay, so I've got the I risk level at 10, and I think that was that's what they really was suggesting. And the max percent drawdown, they set that at 99 because they want you to give it enough room for drawdown. And that's something you might find yourself wanting to put it down lower. They say don't put it less than like 50%, And we know why, because if you see that track record, it had a 46% drawdown. But now if you scale these things down, then that can all proportionally change. If I put this at 5, I can probably go with, you know, they said go 50, like I said, so you could probably go to 25, or maybe give it a little bit of room, go to 30. That means you're expecting a 30% drawdown, or just under 30%. If you want less drawdown than that, if you don't want to see that kind of loss, which this is going to happen, it's just a matter of time, you could, you know, keep bumping that down. If you want to go to 1, that would put you at 6%, and that might be more like what we were talking about with, if you're just looking to make that 20% annual return, it looks like you'd be at about 6% drawdown. That's how you would set this up. Now the key here is, it doesn't look out for you as far as if you try to set this up conservative like this. If your balance isn't in check, it's going to just trade one mini lot on that account. It's going to trade the minimum lot size. So that's where you got to know basically what size of account you're going to need to run this. And let me go and show you how you would kind of do that. We could go back over to their MyFX book page, and let's just turn these back on just so we can get an idea of the whole thing, the drawdown and everything. And what we'll do here is we're going to go look at their lot sizes that they originally were using and that they're currently using on the size of account, and then we're just going to scale it back from there. Okay, so if we go down here to history, let's flip this around on close date all the way back to the beginning. If we look up here, they started with actually that's me putting $5,000 in on the custom analysis. Okay, let's just do this. Let's put it back to the 10 because that's what they started with, so we need it to match. Okay. So now we can look at this. We can go to the history, close date. Okay, so we can see they started off, they did a little test trade there, it looks like, and then they started off at 0.06. So if they're trading 0.06 lots on 10 grand, and I want to trade, we were saying I want my drawdown to be, let's say I wanted it, if I do want it at 4 or 5%, 10 times less to make that return we were talking about, that means I have to have a pretty good size account here to trade even a minimum micro lot. So let me show you real quick. Hopefully I'm not going to lose you guys here. So they have 10 grand, they're using 6 micros. What I want to figure out is how much does that mean they're risking per micro. Okay, so I'll take $10,000 divided by 6 because they had 6 micros. They're trading 1 micro per $1,666. And I'm saying I want to trade 10 times less aggressive than they are to just build a consistent return over time. Well, I'll need to times that by 10. And that means I need a minimum of $16,000, we'll just say $17,000 to trade 1 micro. And then I need to make sure that my broker is going to allow me to start my lot size with 1 micro. Because as you can see on this account I'm showing you guys, that's not possible on the with this particular account. It's requiring me to trade 1 mini lot on 10,000. And so that's not going to work. And so if you look at this now, okay, they're trading 0.06 on 10 grand. Now you can kind of put it into perspective. My demo is trading almost 40% more aggressive than they are. So this is pretty aggressive. I probably should have had a deposit of 20,000 to run 0.1 lots. So like I say, it won't look out for that for you. That's what can get, that can get you in trouble if you don't understand the minimum lot size and the minimum requirements you're going to need for the settings you choose. Because really for me right here, it doesn't matter what I set this at, this risk level, it's going to trade 1 mini lot unless I set it really, really high. Does that make sense to everybody? Is anybody lost or confused? They want me to kind of explain that, put it all together, maybe a little more simplified? Okay. Let me go ahead and show you this again now. Okay, so what we've determined is that in order to have the same exact track record, or I mean same exact risk settings as they do, they are risking 6 micros on a $10,000 account. So what I did is I took $10,000 divided by 6 to figure out how many dollars they're risking per micro lot. And that's 1,666. So that means all I have to do to figure out, let's say your broker minimum lot size is 1 mini lot to start with. Maybe your broker allows you to trade micros like 0.11, 0.12, but you can't trade 0.09, anything less than 1 mini lot. If that's the case, you have to times that by 10, because that 1 mini lot is 10 micros. So if I times that by 10, that means I really should have had this account at $16,000 or $17,000 in order to use that default setting that they provided, the iRisk setting of 10, and they had that at 99, but like I said, you could put that at 50. In order to run those settings, you need $17,000. Otherwise, you're putting way too much risk in. Now, if you don't want to use their settings, which are pretty aggressive, if you want to scale it in half, if you want to have a 25% drawdown level, then basically you need double that amount. Now instead of needing $16,000, you need twice as much money. You'll need a $33,000 account to do 1 mini lot, if that's your minimum broker size. Now, like I say, you can open a micro account at FinFX or a micro account at another brokerage, and then everything's scaled back down. Now you can divide that by 10, because now you can trade 1 micro lot minimum. So on a micro account, if you were to set this at 5 and 25, you would need only $3,300. Does that make sense? Hal is saying, now you're getting into the real important stuff. This is the kind of analysis that must be done up front. Nice work. I am sure that many people are lost. Yeah, this is definitely the confusing part, but it's like Hal just said, it's the most important part that you need to know with any system you trade. And what I try to do with all of our systems is, for example, with we have a system with Trade Hero or our Pip Hero system. We will tell you this stuff when it'll pop up and say, hey, your settings are too aggressive for this account size. Here's the settings we suggest you go with, or here's the balance you need to run these settings. But most of these robots don't do that. And as a result, you can be trading too aggressive and everything's looking amazing. I mean, look at my account right now, like I've showed you here. I've made 10% in 2 weeks, and everything looks great. It doesn't look like I'm going to lose at all. However, I'm too aggressive. I am, like I say, 40% more aggressive than they are on that track record that we've been looking at, which obviously is too much. So really what it comes down to is simply figure out what drawdown you want to allow. If you want to allow a 25% drawdown, you'll have to put your iRisk level at 5, and based on what I've already done for you, that would mean you need a $3,300 account. You'll need $3,300 only if your broker allows 0.01 for the minimum size. And if you want to test that, if you want to test what your broker's minimum size is, you can just go in here to the symbol, pretend like you're going to place an order, and look right here. These buttons are valid. I could trade at 1.0. Let's change it to 0.1. It's good. If I go to 0.09, no, they gray out. That's too small of a lot size, so I can't trade 0.01 minimum, which would be what's necessary to use this with anything less than $17,000. Okay, so if you can do this though, if your broker will allow 1 micro, then you only need $1,700. And that's when you can do what I'm showing you here, is just kind of scale it. 1,700 would be the default settings. If you want to trade less aggressive, cut it in half, for example, then you're going to need $3,400. And if you want to, just keep cutting it back. Hopefully that's all made sense. The good thing is this is recorded, so you can review. You can review the recording, kind of stop it and rewind it and kind of make some notes on that. Much clearer. Thank you very much. Okay, good. So you need to do that with any system you use. Figure out the minimum you can trade per micro or per mini if that's your minimum broker size. Anyways, okay. Any other questions then before we move on? So we showed you how you can do this with PipStat, and you're going to find, like I say, some systems aren't going to really work that well with PipStat because what they're designed for is their unique, hedging strategy or money management strategy. And TomZA might end up being one of those that trying to manipulate its stops and targets, it might not make it better. I might be wrong. That's something you guys maybe could try out. I haven't done it myself yet. Is kind of do some analysis on it. And then when we go to automate this thing, if we can get a PipStat automated, then it could get in there and do that, and then we'd see it all come together. But you guys can kind of see how this system works right now. It's got 3 trades open. It's bought the euro at this price. The market went down against it. Let's go over to my chart here, and I'll draw those on for you. Looks like I'm not going to be able to do that. I could show you on the price, though. Basically, it bought on the 31st, 318. So it bought right in here at 30.34. That's up here, actually. So it bought right here. You can see the line on the chart. It bought, and then the market went against it. That's normal. That's the way the system works. If it goes against it, what it'll do is either hedge or buy again and add to the position. And you can see how it did that. It bought and added to the position here. And then the market went up, and we could go look at some closed trades, see if it, yeah, there were some trades in there that it was closing with profits at the same time as well. So anyways, it's kind of a confusing system of how it actually functions, and how is really, like I say, it's kind of not the system that's trying to pick the perfect time to get into the market. It's not trying to say, oh, okay, let's figure out how to buy this thing. Let's figure out how to make 90 pips on that big move. That's not what it's trying to do. It's trying to use the cost averaging approach. And what that means, it's taking multiple positions at different prices to have like an aggregate or cost averaged overall position. So actually, let me do this. Let me put our PipStat Manager program on here. And it'll actually tell us exactly where that cost average price is and where the market needs to go to break even or to be in the profit. Okay, and I could show you how that works. So give me just a minute and I'll copy that one over as well here. Yeah, that's what Hal's saying. With PipStat right now, to try to manually override it, something like TomZA it's not going to work very well because it trades 24/7, and you'd have to be keeping an eye on when the signals are coming out. Okay. So let's see here. I've got let me open this up. I'm just going to kind of show you guys, give you a little visual on how this cost averaging works. Okay, so I'm going to put our PipStat Manager program on here. Okay, there we go. So you'll see that it's through some lines on here. This is so you can just drag the lines to move the stops and targets, which the latest version of MetaTrader offers that now as well. That's why there's more to PipStat Manager than that. But anyways, we're not going to get into that today. All I'm going to show you here is that, see if I can get this. Usually we use a white background. We have a template that we use. Let me just get the template for PipStat Manager. Make it a little easier to see. Okay. There we go. Okay, now you guys can see what we've got here. So this is PipStat Manager showing us this purple line. What that did is it looks at all these positions, it looks at the lot size, the direction, the price, and comes up with the exact current break-even price and what the actual aggregate position is. What it's telling us is we actually, with TomZA right now, I have a cost averaged buy position of 0.1 lots at 1.30377. So that's the price the market has to come to for it to be in profit. Now with TomZA, it might do things a little different with the positions though. It might say, I'm not going to wait till it gets there. If it comes up to somewhere in here, it might close out this buy trade, which kind of unlocks the hedge with this sell trade. So trying to understand what it's doing, it's not even going to be possible to really figure out exactly when and why it's doing things. But to kind of get an idea of what to expect, this is probably enough. Basically, it's, like I say, it's just trying to find, not trying to find the best big run in the market. It's trying to just almost always be in the market, and if it's wrong, it will add to the position. It might hedge the position. Once that happens, it might add another position and unlock the hedge. But overall, it's just trying to keep the equity curve going up and then taking profits along the way. Does anybody have questions about how TomZA really works? Or did that make sense? And now you can see how it went and drew all those arrows on for me with PipStat Manager. I can hover over now and it said that trade made 30 pips, this one made 30, 30. Looks like they're targeting 30 pips on these trades. So there's something else you can see that PipStat Manager pointed out really easily. They're looking for 30 pips on these trades. If they're wrong, they'll hedge or they'll cost average at a certain level. So someone's asking about how about Tokyo Grid. You know, that one we'd have to jump in and analyze it, do the same type of thing to see exactly what's going on with that one. But yeah, we can possibly you know, look at a few other systems. I think we're pretty much running out of time for this webinar today, but Hal says he might give it another shot. He's more educated and he'll be more careful this time. So yeah, hopefully what we've gone over today allows you to look at the system a little different than the way they're marketing it. I mean, they're marketing it as it's going to build this huge return, but I've showed you the risks now involved in doing that and kind of what account parameters you really need to accomplish that. And if that's not what you're looking for, if you don't like those big drawdowns, now you guys should have an idea of how to scale the settings back. So I think we're going to close things up. If you guys have any questions, you can use our live chat. You can review the replay, shoot us an email. Next week we'll have a new topic. Like I say, we'll post it on the blog. We'll shoot you an email, and there'll be a little article about it, and then we'll have the webinar. So thanks everybody for coming today. I hope everybody has a good weekend, and we'll talk with you next week.